Despite some ups and downs this quarter, Johnson & Johnson stock looks like a great deal. Let's find out why investors should be paying attention. Welcome back, guys. Let's talk about what is going on with Johnson & Johnson. Thomas, you are saying that shares are as cheap as they are going to get. I mean, the stock is down in pre-market trading following the Q1 release, but there is a bottom in play and there's reality to face. So tell us more about the news here.
Well, right. So the stock technically is trading down at the bottom of a long-term range where we should expect to see some solid support. Now, that idea is compounded by the fact that the stock is trading at the low end of the historical price multiple range and the dividends at the high end of its traditional yield range, which just suggests a deep value for the market relative to historical norms. Now, that value is also kind of highlighted by the analysts. The analyst's lowest target is like 5 or 7% above the current price action. So we're looking at a stock really below where it should be trading. It should be rebounding right now.
All right, you did just mention the dividend here, and that's something I wanted to note. Johnson & Johnson has increased its dividend yield again this quarter, marking 62 consecutive years of payout increases. How sustainable is this dividend policy going forward, do you guys think?
Oh, I don't think investors have anything to worry about here. The payout ratio is around 34%, which is not unreasonable at all for a company of Johnson & Johnson size. And the dividend growth is going to be predicated on the earnings growth. And as I was looking for the quarter they just reported, the earnings growth was solid year over year. They posted a year over year beat on earnings. So I don't think there's anything that investors really need to be concerned about with the dividend.
Right. And the guidance too. The guidance is calling for mid-single digit growth, which outpaces the historic dividend growth. So we
Right.
should see some sustainable, long-lasting distribution increases here.
All right, let's touch on the competition here. With sectors like medtech leading in growth, does Johnson & Johnson have a good strategy to maintain or even enhance its competitive edge?
Yeah, I mean, I think it does. Spinning off Kinview helped trim off some dead weight. We're getting some margin improvement, focusing the business, and the pipeline is really looking pretty nice right now. I think one of the big highlights of this last report was just how many positive pipeline developments they presented. That just plays into the idea of long-term revenue growth sustainability and dividend growth sustainability.
Imagine investing in the next big stock before it hits its peak. Our exclusive report, 7 stocks that could be bigger than Tesla, Nvidia, and Google, introduces you to the growth stocks set to skyrocket, offering unmatched returns for your investment. These aren't just any stocks, they're the carefully selected potential market leaders of tomorrow. Download this free report now to discover the next big superstars.
Last week, I wrote about the Shockwave Medical merger, or not merger, acquisition, excuse me, that J&J made. Obviously, there's nothing from that acquisition that was reflected in this earnings report, but the company mentioned that, or at least hinted at in the conference call, that they may not be done doing mergers and that they tend to take a decades-long look at these types of things and they're not just looking for a quick hit. So there could be more news coming down the pipe there in the med tech area. I'm sorry.
Well, right. And medtech was strong. It was the strongest segment. That echoed by the report from Abbott. Medtech was also strong. Medtech is growing. It's outperforming, and it should help sustain some strength in the business this year.
All right, and considering the latest adjustments that we've seen in revenue and earnings guidance, what future projections can investors kind of expect for the next quarters or even the coming year? Is this going to remain a good buy for investors?
Yeah, I think it is. And that just goes back to the pipeline. The pipeline is looking really nice. The core business is good. So we have sustained stability in the core business, plus all this pipeline growth over the years. So I think the outlook, the outlook is pretty good.
All right, well, with its solid track record and promising outlook, Johnson & Johnson remains a stock to watch as we move further into the year. So keep an eye on this one right here at MarketBeat with us. Thank you for tuning in. We'll see you in the next one.